going on, y'all? What's going on, y'all? It's Brinks Trades coming to you live with another week of breakdowns. Hopefully this is coming through okay. I'm gonna go ahead and drop the link in here. Hopefully next week I should be back on track with Cam and the so until then I'm just kind of making sure that I'm keeping myself accountable for the community, for my community, and then going. So hopefully you guys can see this, and hopefully you're joining in right now. I'll just drop the link in my trading community. Don't really care who's in there. See, there's 16 people online in my community, so hopefully some people are hopping on. Let me go over here. Nobody's hopped on yet, but if not, if nobody comes on, then we can just do all these breakdowns and kind of check out everything on our own. And this video will be here to reference things. So hope everybody had a good trading week. I'm gonna go to FTMO really quickly and then type in really just kind of sharing this screen. Stop sharing. Continue. Make sure I'm not sharing the right stuff. The wrong stuff. So there's a couple of accounts. So just an update, right? So obviously last week coming into the FTMO uh, funded account situation, we had a crazy series of bad trades last week, right? So obviously we came out with this funded account. If you guys don't remember, this is the 200K account or the 200K account that I passed and then put them together. So this is actually my live funded account. We started at $200,000, right? And then just had a series of bad trades, right? Just it was really, really bad. And obviously, this is the one thing that the transparency piece that I want to tell people about when they trade, right? So like you can lose, right? Everything, right? You can lose a lot of things, right? You can lose, the losses are real, right? And I think trading, a lot of times when you watch these gurus online, you don't ever see them talk about the losses. You just see people buying things or, making money, right? And having big days, but they don't ever really show their bad trades. A lot of traders are right now, and it's funny because when the markets get challenging, you stop seeing people post winning stuff, and they might start relying back to going back to showing off their cars or showing off their their things they can flash around with, or the various um, courses that they're selling or whatever. And so you can always tell when the markets are having a challenging time with people, because you start seeing stuff like that over and over again. And so again, I want to be very clear with this process because again, I want to be able to teach people and show people like what trading looks like, but um, I also want to be able to document the journey of me, obviously, hopefully getting to the point where I can work for a hedge fund one day, right? It's kind of a long-term goal, or start my own, right? And being able to kind of show the process is what I want to be able to do. So we had a series of bad trades last week, right? So we came back down, started the account at 200,000. Lowest point of the account was sitting at 185.4. This week we had, some good trades, right? Really bringing things back a little bit, basically knocking out about half or a little under, just a little over half of the drawdown that we lost. It's about 15, and we brought it back about 7 and a half. So just sitting at about half of what we lost. And so this is one of the things that I tell people all the time. That's like, hey man, y'all gonna be trading, you have to know that bad trades can they can throw things off, right? You got to manage your risk, and this risk was actually managed pretty well. So I'd say in a week and a half, me to lose 15K in a week and a half, over I think maybe 10 trades. I think that's actually pretty good risk management. It doesn't look like it because the wins weren't there, but this could have been could have lost the entire 20 in, in that amount of time that I was trading. So I think there was a couple of trades where my risk management was probably double than what I wanted to risk. And so maybe at the lowest point, my account should have been somewhere around 189 instead of 185. So some stuff that I'm working on trying to manage. So, but either way, my worst trading streak that I've been on in 10 years is 10 consecutive trades in a row, right? So I've lost 10 consecutive positions in a row. And usually, so that's the worst thing I've ever seen in my decade of trading, right? So 10 good setups in a row. So I figure if I can just at least get to 10, right, and my account can withstand at least 10 bad trades, then most likely I'm going to turn things around, right? And so you also have to know that you can't win things all at one time. You have to take your time. So we closed out last week with two really good trades that brought about us back up to 7,000. Ideally, my goal for the rest of the year is really to take this account and obviously get it back to break even, maybe even get it back to the payout phase where I'm up a few thousand, right? So again, that's my biggest thing is I just want to be able to get this account paid for, right? Obviously by making, the money back that I already invested in it. And there's no time limit on this. I could take me a year to make the next $7,000, right? So I'm not really tripping about that. It's really about taking really good trades and managing your risk properly. And then, obviously doubling down on the good setups. And then the other account that I wanted to show everybody was the third FTMO account that I'm taking, right? So this is the third challenge that I'm taking. And I'm actually doing pretty well in this one. So this caught, the bulk of the trades that I took last week. And so again, I started starting to draw down. I was kind of in the same boat, again, copying these trades from one account to the other. I was in a drawdown boat, but it just wasn't as deep of a drawdown here. So I was down to about 98 to 98,000 on that 100K. So that's 2K, a little under 2K. That was drawdown, and obviously was able to make that back. And I'm sitting in pretty good equity spot. I think being up 4,000 pretty much dollars on this account, and I have to get to 10. I'm in a really good spot to again be a little bit more aggressive. I think anything above 5K when I take these challenges, I can, if I'm above 5K, then I can start being a little more aggressive to get to that 10K overall profit. Again, I was able to pass the last one in about a month. It's not really necessary that I need to pass these in a certain amount of time, so, but it's really about finding a good setup and managing my risk of the bad setups and doubling down on the good ones. So hopefully, that you guys will see that. But again, I want to continue to be very transparent as I pass all of these challenges and get funded with FTMO. I want to document this process in full, show people that obviously you can make a lot of money, in trading, or you can make a sustainable income in trading. It's possible, not probable, but it's possible, right? So with the other two accounts, I obviously took 200K accounts and passed them to get that 200K combined. That was I had to make 10% of the first phase for both of them and then 5%. So altogether, 15,000 for each account. So that's 30,000 altogether. So from the beginning of September to I think the beginning of October, I was able to take those accounts and make pretty much 100 or about $30,000 on both of them, and then add this in the four, right? So we're talking like $34,000 in the last month. Factor in the losing trades, it's down to like 26, right? Or the losing count so far. So altogether, virtual and real profits, right? You're sitting at like 26,000, which is awesome. Um, what's up, G? With I don't know who this is, but I feel like I recognize the name. I know I probably feel like this is a student. But yeah. So that's pretty much the background for last week's trades. Let's go ahead and jump into uh, the. Actually, I wasn't even showing this the whole time. This is what I do every single time. But if you guys can see here, I can review that real quickly. So again, 3,000 up on that one account, and then going to the FTMO one, started out again down about 7 on this one, and then bringing it back here. So this is just what I was basically talking about, just to kind of give it a visual. But let's go ahead and get into the charts, and I'll keep you guys updated as I kind of bring this account back, and then obviously pass the other one as well. And so when I pass the first phase on this one, my goal is to get started on the last one, which will be that 400K account, and then maxing everything out. Um, Obviously, as I finish the second phase, then hopefully finish the first phase of the fourth one while bringing these all back together. Again, sounds like a lot, but there's not really a time limit for me to do those things. I'm not really trying to rush anything. Again, it could take me 3 years to pass this. It's not going to, but I could, yeah, I definitely want to make sure that take my time, do this right, because again, 400K funded with FTMO, and obviously being able to scale that to 800K over the next year, and then up to 2 million, right? With the actual funding with their scaling plan. That's what I'm really trying to do, right? I'm trying to get fully funded with the firm, get maxed out, with to the 7 figure range, the million, 2 million in funding, and being able to kind of take those profit splits, because again, 10%, 3%, right, on $2 million is is like 60K, right? So being able to kind of make 1 to 2 to 3% a month is life changing money. So that's my goal, right? And it's gonna be second, right? But that's what I'm shooting for. So let's go ahead and get into the charts. I'm gonna share my screen before I hear Hugo in the back of my head talking about you're not sharing your screen. So let me go ahead and start breaking this down. So again, dollar, right? The last few weeks on dollar, as I was looking at dollar, I said, hey, we might be in the situation where, we kind of grab liquidity and then start to run lower. We have been in this downtrend for the last month. The month is ended, so I am going to start in the higher time frame, look at the monthly calendar, right, and see what's going on here, and um, take a look at basically the bigger picture, right? So we did have, again, it doesn't matter what you call this. You can call this consolidation, manipulation, distribution. You can call this a double top, right? You can call it us, you know, trading into old liquidity in this fair value gap and then going lower. Whatever you want to call this, right? We were definitely in a bearish sentiment. We wanted to see the market go lower. So up until then, this is kind of like the first major swing, right? In a price break of structure, right? So a lot of times what happens is the market's going to rally, it's going to find old levels of liquidity to run to, and then start to go lower again, right? So the bigger picture as we go into November, we go into December, right? We see how the market swept this liquidity, swept this low right here, right? And then decided it was going to run upwards. So there's a couple levels here that I'm looking at that the market could want to play to, right? Just on the bigger monthly time frames, right? And I'm not going to focus on these too much, but it's just going to give us a bigger picture as we're telling this overall story. The first level here is the old high of last month, or last previous month, high of August, right? So buy side liquidity sitting up here, right? We also have this old fair value gap right here, and then consequent encroachment of this, right? So I really want to see how on the monthly time frame over the next few months, right? This could be next 6, 7, 8 months. How do we play into these levels here? And it's not something I'm going to think about from the day to day, but it is something that I'm going to think about as we kind of like take a step back and look quarterly at where we're at. So again, that's the levels that I'm looking at here. But again, I'm not going to be paying a lot of attention to those. So I'm going to say monthly, right? Just leave that on there. And then obviously the fair value gap there. So really, again, two levels that we could, as we sweep this low, we could be heading up into this old high here with this gap, right? This old high there, right? So that's what I'll be looking for against it, especially since we took out the low to start the month last month. So as we jump down to the weekly time frame, right? So we start, and originally when I saw this low taken, I wanted to see the market really continue to go lower. Again, we're still in a downtrend, but the market obviously swept liquidity. It's starting to give us higher highs here. If you jump down to the daily time frame here, you can see that the market is starting to give us a lot more of a bullish run, right? You see these higher highs, higher lows being formed. You see your market respecting all levels of liquidity. Right now, I'm looking at this old monthly high here. So not only is this a weekly high target, this is also a previous high of the month of August. So I would like to see the market really, run to this level. We just check out a couple of time frames where the market is, obviously trying to run buy side. So that's what I'm going to be looking for, right? Can we continue to go higher? So this is ideally something that I would love to see. Is I start the month off trading back into this gap, and spend the rest of the month going up higher, right? Or spend this week, trading into this gap, and then spend the next, week, at least the rest of this week going higher, right? I don't want to over project for the month, but ideally that's what I want to see is the market really run this level of buy side. I think that's what we're attracted to. That's what we're running towards. We just inverted, we fully inverted this fair value gap here. You can see here, right? That got inverted, traded straight through. So I don't expect us to want to come back in here and respect it and go lower. So we could see a retest of this gap here and then take things higher. So that 99.26 level, 265 level, but ultimately I'm looking for the market to get here. The crazy thing or the tricky thing about pullbacks or projecting the low in an uptrend is that you never really know if the low is going to be the low the low that you set is going to be the low that's actually taken, but over project uh, you can over project or actually project correctly the target. So I never really know for certain whether the pullback levels are going to be the levels that are taken, but I do think that over time the market will take this high. So best guess here, this is more what I'm focused on here, right? So you never really it's hard to catch the low, right? It's hard to catch the low in a downtrend. It's hard to catch the low in a pullback, right? But you can start to see how the market reacts to those certain levels. So that's ideally what I want to see there. If I jump to Euro USD, again, same thing here. As if this high marks if we go to dollar for a second, and this high marks the high end of that, then this low here is what I want to see the market run to. So I think Euro is actually going to be looking really good for bearish opportunities. Now, mind you, as we start the new month off, we could be seeing a bullish run, right? We could see a 1 week or the first few days of the month trading higher back into this range, and before it decides to go lower. I will be looking for my New York continuation plays, opportunities there. And that's my patented setup. So I want to look at this really quickly. So again, coming into last week, pretty much the same thing, right? Month has been one of us going higher, right? And so we did sweep these lows, come back down here, and again, the opposite of euro pretty much happens, or opposite of dollar pretty much happens in euro, right? So we trade into this gap and then run higher. We consolidate, manipulate it, and then distributes. Obviously, you could call it a double bottom consolidation, power three play, whatever you want to call it, right? But the point is that the market is running higher, right? So ideally, what I want to see here is the market. I mean, if we are running lower, it would be kind of interesting to see how low we get. There's three levels, just like there's the same levels on dollar, just opposite or inverse. Again, we have sell side liquidity sitting here. Right. Then I have obviously consequent encroachment of this wick here. And then so that's the first two levels. Then the second level, the third level is obviously the fair value gap here. So three levels that I want to see how the market reacts to over the next few months. Obviously, we have this huge monthly wick. We did trade up into this gap here and then go lower. So this could be the start of a multi-month downtrend, or we could just trade lower, maybe go take out the low here and then start continuing to run up. I don't think this is going to happen. I mean, if you look at this, right, we basically broke structure to the upside. And this is kind of like your pullback. We could even go as high as this level here. This consequent encroachment level, this wick lines up with the high, which kind of would give us like a great break and retest or breaker setup, right? So um, there's a few things that could happen, but as of right now, I try not to over project and I try to jump down to the daily and weekly. If I can't make it there, you shouldn't really be trying to take trades on the monthly time frame because it's just very big. And for us as retail traders, most of us don't have the money to kind of like play with that stuff. So ideally, I'm looking at these lows here. This would be a great target for us to reach. Sell side liquidity at 1.1389. So long term, I think that may be the level that we're looking at. In the short term, we did take sell side there. We are trading in this gap. So I am looking to see if we can continue to make a run down here. I'm going to bring this gap up here because I want to see. Yeah. So a little secret here. Yeah, a little secret here is that fair value gaps, I always talk about fair value gaps are divided into three ranges: the top, the middle, and the lower. But technically, it's five, right? It's the top, the 25%, the 50%, the 75%, and the lower. A lot of times when you see the market dip into a fair value gap and it doesn't quite hit consequent encroachment, a lot of times it stops at the consequent encroachment of the top half, which would be 25%. So, um, but ideally, I do want to see this inverted, right? And I want to see the market continue to make lower lows. This is in a tricky spot because this technically is a bullish fair value gap. So we should see the market want to project up through this. You got two options here. You can be patient through this run and wait till this market inverts this gap like this and trades another down another 100 or really 70 points. Or you can try to be aggressive here and short, obviously, in this gap. Um, for me, if the setup is really clean, I'll look to short. But if it's not clean, then I might just let this run and keep going here. And then when it inverts, then that's when I'll start to take that trade because you'll still have 70 to, you'll still have a good 100-ish, 80, 90 points from the inversion of this gap lower. So sometimes all trades aren't good trades just because things are going out. Kind of want to take a step back and look at the overall direction. But us swinging this and going lower, this is an opportunity for the market to really, really run the way that we think it's going to go. So that's the first thing. The second thing is what's the second thing? So let me jump down the 4 hour. Yeah, and this is pretty much, if I had to project the level that I want to see the market run to for next week, ideally I would love to see something like where we trade, maybe take trade back into this high here. There's a few levels that I think the weekly high could form. Us running buy side liquidity there. Us coming back into this old fair value gap here. Right. And then obviously the one that just formed right here. Right. So it really kind of depends. If I was trying to, and I always think about this, like if I was trying to take people's money, right? Like, and if I was trying to run this people's stops, what would get people? Well, this is already looks like it's, a downtrend. So there's probably not, there's probably liquidity here in this gap here, but like I probably would say there's probably more stop losses sitting over this high and in this gap. So if this was me and I wanted to take people's money, start the week off or run areas where I thought people thought that they were safe, I probably would take out this. I'd probably trade into this gap and then go lower, right? Because that would really throw people off. They would think it's a break of structure. They might have their gap sitting or their stop sitting over this high here, trade into this level right there, and then continue to run lower, right? That's what I would think. If I was the market maker and I was trying to take people's money, that's exactly how I would play it. But they could just trade in this gap and then continue to run lower. So you got to be ready for both. I tell people all the time that like whenever you see a range, right, you want to make sure that the fair value gap is um, if there's multiple in a range, multiple highs and multiple target levels, right, and this could be for higher time frames, lower time frames. You gotta make sure that everything is accompanied to, right, because it could technically trade back into any of these, right, even this one that's way up here that was already mitigated. You could see the market trade into this and then roll over and go lower, right? I doubt it'll happen like that, especially since this looks pretty bearish right now. But somewhere in this range, I mean, we have like 100-ish, 80-point range here. So somewhere in this range, I want to see the market form the high for the week and then go lower. So that's what I want to see from Euro. Again, I'm happy that it's given us good movement. It's been very choppy, but you can see that's probably because it's the start of a multi-month, you know, downtrend, which is basically taken the last. I mean, we've pretty much formed this double top with this high running of liquidity scenario since July, and it's November. So we've been pretty much trading down. I want to see again. This is my overall target. I would love to see the market get down here. So we'll see what happens. So let me go to the comment section and see if there's anybody here. What's going on, Tony? Hopefully everything is going well with you. Um, I like these little smaller. I am gonna get back to the Trading View stuff or the Trading Nut stuff probably next week. I'm gonna reach out to him, make sure everything's synced up. But I do like these smaller, little ones better. So let's look at GBP because GBP is actually where I took my wins last week. This is had a very deep range. It's really choppy in here. You can see there's not a lot of levels for liquidity that the market might run to. Let me go to the dollar. We did take the low there. So what could we trade back to on dollar or on GBP that gives us some little buy side to grab? And before we keep going lower, I would say if we just don't immediately keep running down this level right there. That fair value gap or that volume imbalance is sitting right there. Two levels I would be looking at for the market to run lower. So nothing too crazy. Again, I'm not going to spend a lot of time breaking this one down because this is very clear what's going on here. Multi-month, downtrend. What's going on? Long term, I guess if we jump to the higher time frames, that monthly, just to see like where this could potentially run to. We are actually trading in this old fair value gap there. So this is that monthly. So it looks like we did technically start to break structure on this. We took out this held high, rejected, then spent some time trying to trade above it, and then obviously are going lower. I would say a full inversion of this gap is gonna signal us running lower. So like long term bearishness, I don't know if it's gonna play out until we invert this, but we could easily trade in here and then run right back up, right? But I think long term, if we're looking at dollar and saying it's gonna go higher for at least maybe a month or two, and then euro and dollar going or euro and pound running lower, there's an opportunity that the market could continue to run lower. So that 1.31 level monthly. Again, long term stuff. I'm not really focused too much on that. I want to see what's going on here. And here it looks crazy bearish, right? Like I would not be trying to short this. This looks like a standard. If I get rid of this for a second and I just say pretend this line is still there, that buy side line of this old high, which I think is like the high of September, you could see this is a very clean breaking market structure. Like we clearly ran liquidity, broke structure, right? And then obviously ran the high, broke structure, traded back up into that gap, respected that gap on the nose. Look at that. That's crazy. If I were to draw the fair value gap from that high to that low, you could see how the market just respects that completely, even wicks above it, but still respects it and is running lower. That's a very clean monthly run. Clean monthly run. And honestly, if you had caught that there, I mean, you wouldn't have had to worry about anything. You probably would have been down maybe 100 points the whole time. So, and we're talking that's a fire. It's already a 400-point range. So risk 10 standard lots, man. That's 400,000 or 40,000, something like that. 100 lots, it's 400,000. So either way, uh, daily. I'm gonna go look at a couple more, and then I'm gonna look at gold. This is New Zealand dollar, right? Same thing. Just the futures version. Same idea here. Probably, yeah, extremely bearish. This one's just bearish all the way. There's not really anything bullish going on here, so I'm not gonna pay too much attention to that. But daily time frame, nothing to buy here. There's absolutely nothing to buy here. This is a really good really, really good opportunity to short. So let me jump down to the 4 hour time frame again, just looking for some level of buy side that we can sweep before going lower. There's a few levels here on the 4 hour time frame. I would say that one, and then the one technically here. Right. So if we invert this one, then I'll be looking here. Um, I wouldn't be looking to. A lot of times, what will happen is people will invert something. Like when it inverts here, they'll look to buy to go to that next one. Because the order block is sitting right there, I probably wouldn't look to do that. So if it inverts and keeps running here, just got to be patient and see if we get a change in character or breaking market structure here. So it's New Zealand dollar. I'll look at AUD, I'll look at gold, and then I'll look at the Nasdaq and company. Uh, with Nasdaq though, actually, like my projections, I'm not really looking at these things week to week anymore, just because we have somebody in office that can tweet and change the current, landscape of the markets. So when it comes to Nasdaq, I'm actually looking at things more day of to see like where we're at, see what liquidity we can run to. And it's more of like how we're reacting today versus like what's the week look like. Currencies and gold, I'm more like what's the week look like, right? I think there's more stability there. Might not run as much, but it's easier to project in the long term, which is easier for you to catch something. If you know where it's going to go for the week, like if you know what the train's going for the week, right? You can find a stop to get in on. That's kind of how I see this. Uh 6A1, which is again AUD USD. We're in this really weird space where this looks very bearish. If I get rid of everything here, it gapped up, but we still look bearish. Here's why. I see this as an order block, right? A bearish order block here, and I'm gonna put my level there, and then I'm also gonna draw my Cibi, right? So now we paint that with a little more context. It looks extremely bearish, even with the gap up, right? So this wick is basically 100. Oh, it's not even that much. Oh, wait a minute. Yeah, it's 545 to 622. So it's like 80 pips. It looks a lot bigger. The Aussie ranges are not big at all. So it looks a lot bigger than it is. But 80 points from this high to this low. This looks very bearish. This could potentially be a really good swing trade opportunity, only because it's just so very apparent that it wants to go lower. So what do I need to see? I need to see a clean break in structure. I need to see us invert something, give us a clean break of structure. Let us know that bearishness is in full effect, other than just the wick. The wick is a good start, but I need more than the wick. All right, so this is the gap right here. So what do I need to see? I need to see this market run lower. I need to see this market run through this gap, invert it, maybe even take out this low before I start to go lower. But judging how the month ended and the week ended here, there's probably a good chance that we could really attack a lot of this sell side liquidity here, and maybe even trade into this fair value gap over the next few weeks. Right. So that's kind of what I'm seeing here is us really running through and attacking this. It is very choppy though. So basically I'm projecting almost a 200-point run to the downside over the next few weeks. If this plays out, again, I need to see the market structure shift on the 4 hour, the daily, right, to let us know. And it looks like we did start to get that 4 hour break in market structure. Check it back up into this gap here. So ideally, what I want to see is the market maybe retest this. Best case scenario, it's a retest. Remember how again my thought process is how do we where can we run that people have their stop losses here? And if I was on a downtrend, I definitely think my stop losses would be here. So I'd love to see that market get ran up here and then take things lower. Looking at that low right there, that's like 80 points over potentially the next few weeks. Man, I'm yawning like crazy today. You said that was definitely real. Last week was an example of that. I don't know which one you're talking about. Sorry, I didn't check my comments. Um, but yeah, I mean, like I think down, like it doesn't really move. Odd doesn't really move crazy, but it is a good. If you want to try and swing trade something, Australian dollar is a good one because it doesn't move as fast. So the ranges are going to be smaller, and so your head is not going to be spinning as much when you're holding your trades long term. So if you want to practice swing trading, Australian dollar, New Zealand dollars are the good ones. Um, let's look at gold real quick. Gold is on my list to watch. I'm not really like too keen about it. Um, see USD. Let me see if we found the level of support. We traded. I mean, I do think gold is gonna make go back to making new highs again. It's just the problem with a lot of this stuff is that people just see something or they hear the news about something about how it's gonna go higher, and they just say, okay, I'm gonna keep buying, 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 but they're not looking at technicals at all. And so long term, yeah, I think gold is gonna keep making new highs, but I mean, as of right now, it's in a weird space where it technically broke structure here. Trading into this fair value gap is respecting it. I need to see some type of inversion or some type of break in structure to let me know that the market is no longer interested uh, in this run. So maybe inverting this gap, giving us some clean break in market structure. We need to see a bullish break. Right. So ideally, something like that's going to let us know the market wants to run lower. So that's the first thing that I'm looking at. Let me look at. Do not really care about Bitcoin. Bitcoin's moving right now. That's the thing. I don't even know how you trade Bitcoin with a lot of the concepts that I use. I mean, you can look at the technicals and see stuff, but like it's hard to. Time and price is a little bit different for a market that trades 24 hours um, a day, 7 days a week. So Nasdaq, we can see we traded back into this gap here. Right. Again, with Nasdaq, I'm looking more at the day to day. I would like us to potentially go run lower. I think we broke through this level here. If I look at this wick here, I bet you we're trading below consequent encroachment of this wick. Just about, just under. It's kind of close. But ideally, again, long term projection, I'd love to see the market really run lower. The only thing I can really project to the closest levels would be this one right here. So ideally there is this big gap here that I did want to see the market trade back into on Monday. I will leave this as an open target. I think this is a level that the market could run to, right? So if we start running, if we start the week up by maybe opening a little bit higher, trade into uh, consequent encroachment of this wick, maybe I don't see a fair value gap or anything we could run towards. So it's the only thing I could really grasp on. I would like to see something like that. I think that gap is going to get filled at some point. So um, it makes sense that this 4 hour breaker structure would take us there, but really it would be looking here. I'm just going to say this is TP1, and the box will be TP2, right? A fair value gap will be TP2. So that's ES or an NQ. ES, we're already trading in the gap there, so I'm gonna leave this one alone this week. And then YM, we're already trading there, so this could be NQ not taking its gap could be a sign of divergence, right? And it could say that maybe we don't need to go any lower because we did run liquidity, so maybe we come out here and take that low and then run higher. Uh, I don't really know yet, so I kind of need to see more information. And again, with Nasdaq right now, I'm kind of looking at stuff day to day instead of um, instead of long term, just because I don't have too much faith in the markets when when the person in office gets to talking about stuff again. Regardless of beliefs, there's never been one person that's held this much influence over the markets. Like if he says the right thing, the markets will crash, and I don't really like that at all. It's way too much uncertainty for us trading. So even if again, if you rock with his policies, you don't rock with his policies, whatever. Um, that is not something that's good for me, right? Like this is not something that's good for conducive trading. Um, so I'd rather just kind of take things day by day and not over project. And I don't know if it's going to be like that for the next 4 years. But if it is, then maybe I won't even be trading currency or trading indices like that. I don't like that at all. So maybe it's more of a day to day thing for me. Exactly, the tweets that make the markets fly. It's like nobody's ever done this before and had this much influence over the markets. Um, it's not good. It's not really a good thing for for us. It might be good for people that have a lot of money in the line or leveraging certain things. Or if you're buying Bitcoin right now, it seems like he's a real big advocate of Bitcoin. So I mean, that could be really good, right? They said he's personally bought, or his team has personally bought like $1 billion worth of Bitcoin, or $500 million, something like that, in the last year. So could be really good for that. But yeah, as far as like the other stuff goes, it's like, it's not really, doesn't really affect me or help me in any way, shape, or form, man. So, um, so yeah, that's kind of why I haven't been trading Nasdaq as much. I did catch a good trade on Nasdaq. So again, the scenarios and setups are going to be kind of day by day. Really, like what can we frame out before the session starts, or what can we frame out before the afternoon session starts, or something like that. So that's kind of what my draw is going to be on Nasdaq, and how do we find the daily draw liquidity versus trying to find the higher time frame weekly one. Um, excuse me. So that's basically the trade set that I took this past week. I ended up catching a really good one. This move, which I documented in the chat here. Let me share this tab. Yeah, right here. Basically, was able to call out this trade, and if you're in the mentorship group, you already know this. But these are my executions. I ended up taking a really good trade on Friday with Nasdaq. There was 3 times. This is my initial entry. Ended up scaling in here, here. I think there was one more. I thought there was one more. So yeah, I ended up scaling it twice, and then bought back right there. So that was basically making $1,000 on my challenge account. So that's awesome. Um, so setups will probably be looking like that for me going forward, where I'm looking at the market the day of instead of doing these over projections. So won't be as much for me in that going forward. So yes, I'll stay on for any questions. Looks like we have 2 people on. I know Tony's one of them. So Tony, if you have any questions at all, let me know, and we can talk about them. I got a couple minutes. Um, Other than that, shameless plug for talented10thtrading.com. Again, if you're in the mentorship group, uh, you know, feel free to check it out. It's something that I spent a lot of time in and put a lot of effort into. Um, so yeah, so my brain is kind of trash today, man. I'm like tired from the last couple of days. So but yeah, I'll stay on for any couple questions you guys have. Again, if it's about this one, if it's another asset class you want me to look at, Tony, if you have questions, or there's one other person on, somebody else, feel free to throw the questions in there. Yeah, just until then, if there's not any other questions, obviously next week we'll be right back at it, and yeah, be looking at these markets, and hopefully we can close out the year strong with a couple more funded challenges passed. I think it'll be really awesome to go into 2025 with or 2026 with at least 400 to 500K in funding. So that's what I'm gonna be aiming for, and yeah, we're gonna have a lot of fun and we're gonna make some money. So hopefully you guys do the same. So yeah, I'll stay on for a couple seconds for any questions and then go from there. Okay, looks like that's all we got. So I'm gonna go ahead and end this out, and hopefully you guys have a great trading week. Again, then follow me, obviously on all social media platforms, Brinks Trades, Talent to 10 Trading, and yeah, catch y'all next week. Peace.